And welcome to the second part of the temporary insurance agreement. You recall that we did the first part where we talked about the importance of the TIA and everything. So it is important that you review that, and then we'll follow along now with the second part of the temporary insurance agreement. Okay? So the purpose of all of this today is to basically extend, you might say, where we left off. So here is basically four ways a client might have termination of the policy by the insurance or denial of claim. In other words, the part of the TIA process, of course, is that there's always a possibility the insurance company could, in fact, deny a claim. And so we're just going to name the four top ones, basically, and then we'll go into more detail of each one. Okay. First one, of course, is fraud. Then, of course, non-payment of premiums. We all know that. Payment against public policy, in other words, committing an illegal act or what they call an illicit act, and of course, material misrepresentation. So we're going to look at all of these things here in detail. Okay, so let's take a look at the first situation. So when we left off, like I said in part one, we had actually issued the TIA, and we did that based on the principle that, as far as you were concerned as the agent, the client told you the truth, and you had no way of knowing that that you would have been misled or anything along that line. Okay, so now we're going to discuss why an insurance company could still terminate the contract, even though everything was answered truthfully and so on and so forth. There could be some mitigating situations where the company could say, do we really need to pay this particular claim given the current situation? Okay, so in other words, why are there terminations and denials for insurance companies? Every once in a while you hear about these things. Okay. So basically what it really comes down to is the insurance company saying, well, based on everything that we have now found, do we really need to pay this amount of money out? Because if the person actually has, in fact, not done the right thing or told us the truth and so on and so forth, okay? Two of the biggest issues, and whether it's life insurance or disability insurance, okay, every insurance contract has what's called a contestable period, which is, of course, the first 2 years. Okay, so there are two factors or two ways of what we call material misrepresentation, and that is during the contestable period and, of course, beyond the contestable period. So the contestable period is the first 2 years. Okay, so basically, in the first 2 years of a life insurance contract, whether it's a life insurance or whether it's disability insurance, it doesn't really matter. The fact of the matter is that they discover something during that period of time, they could, in fact, deny the claim. Okay, so as it says there, during the 2 years, if the company finds something that had been known when they initially issued a policy, it would not have issued a standard contract, then the contract could be void. So it's, in essence, what we're really saying here is that if the company discovers something in the first 2 years that had they known then being, of course, the day when underwriting the case, what they know now, basically, would have they issued a standard contract? They might have issued a substandard, but remember, the TIA was issued on the basis that, in actual fact, the contract was issued standard, okay, not substandard. Again, so that's an important consideration to make, okay? So in other words, the company will basically say, no, we would have never have issued that contract had we known that. Then all that happens, the contract is void. So basically what happens is the client gets their money back. In other words, there was never a contract in the first place. In other words, essentially what we're saying is, here's your money. We would have never covered you anyways, and so therefore, essentially, please go away. So if the company catches the material misrepresentation in the first 2 years, they could, in fact, let's say, cancel that contract. After 2 years, however, it becomes incontestable at that point. In other words, during the first 2 years, it's really what we call innocent misrepresentation. Sometimes it could happen where an individual might not even know there was a problem, and therefore they didn't purposely lie or anything along that line. But nonetheless, the insurance company did find that, and therefore they decided that no, this is not a kind of risk that we want. So it doesn't necessarily mean that the client deliberately did this. So in other words, mistakes are made. And remember that mistakes are not intentional. People make mistakes, okay? So if they catch that mistake or if they find something within that 2 years that had they known then what they now know, they would have never issued a standard contract, then they could void that contract. Once the 2 years are up, however, that is it. It becomes incontestable, okay? However, there is one exception to that, and that exception, of course, is fraud, because fraud is intentional, okay? In other words, you knew what you knew and you deliberately hid that information. So you can't tell me you forgot that you had a heart attack. You can't tell me that you forgot that you're a smoker or you're a diabetic or whatever. So you knew what you knew. You deliberately hid that information, basically. So therefore, fraud is an intentional act versus a mistake, which is not intentional, but a fraud is intentional. So therefore, you knew what you knew, and as a result, we feel that you misled us. In other words, you deceived us, basically. Okay. So, for example, that sort of innocent misrepresentation, you might say, a client makes a mistake in their birth date. They said they were 30, in actual fact, they're 35. Well, we would have insured you at 35 anyways. All that really happens when a client dies is we will adjust the coverage according to reflect your real age, basically. In other words, we would have not insured you at 35. We certainly would have insured you, okay? Our client inadvertently marked themselves male versus female, for example. Again, there's no reason why a client would not have been equally insurable as a female. So in other words, the source of the misrepresentation is not deliberate or fraud. In other words, it doesn't really make a big difference in terms of the insurability and all that. So had that been caught, the policy would have simply been reissued anyways, so it isn't a big deal. But as I said, fraud is a different matter altogether, okay? In fraud, there is an intention to deceive the insurance company, and that's where the problem is. That word intention is important because you knew what you knew, and you just intentionally said no, or you lied, or whatever. So fraud involves a deliberate deceit, basically. Fraud is an intentional act. So if a company discovers fraud, they can say, we're not going to pay this at any time. Now notice the word any time. In other words, there's no statute of limitation on fraud because fraud is considered a criminal act. That's the main thing. So in other words, this could happen 30 years from now, and they discover fraud, then they could cancel that contract at that point. So there is no statute of limitation on fraud. There is a limitation under what they call the Limitation Act in terms of misrepresentation. Okay, so in essence, fraud goes on forever. Fraud is a criminal offense. There's no limit to the amount of time the company monitors this. The incident of fraud could have happened 10 years ago, 20 years ago, 30 years. Doesn't really matter. Like I said, there's no actual limit to the time because time does not run out on criminal offenses. Is basically okay. Another way that an insurance company could, in fact, not pay or deny the claim, let's see, is that if the client obviously does not pay the premium, okay, so that's obviously you have to pay your premium. For the most part, there's a 30-day grace period for a policy before it lapses. So most companies will give you a 30-day grace period. So let's say the period was, let's say, January. The 1st is when you're supposed to pay your premium. You died on the 25th of January. You're still covered during that period of time. All the insurance company will do basically say, well, the premium due was $1,000. Let's say January the 1st, you didn't pay it. You died on the 25th of January. You're still covered for the minus the $1,000 that you should have paid for us. That's essentially what happens that grace period. Okay, so term insurance basically has that 30-day grace. Life insurance, any life insurance product, with the exception of universal life. Universal life has a 60-day grace period, and that's an important thing to emphasize to your client. While all other policies have a 30-day grace period, in actual fact, universal life has a 60-day grace period. Okay, so term insurance, like I say, basically there's no coverage, there's no cash value of any kind, so it does run into a dangerous position if the client doesn't pay. Whereas permanent insurance, such as universal life, there could be some leeway here in that. But the main thing is that you must pay your premium. That's the obvious thing that everybody would agree on. Okay. Again, the other thing that could happen is that what we call payment against public policy. In other words, would an insurance company pay out money for a person committing an illicit act? In other words, you deliberately put yourself in harm's way, or you deliberately put the life insured in harm's way and cause their death and everything else. Obviously, it goes against public policy that we will reward you for committing an illicit act, okay? So basically, in the case of death benefits payout will not be paid because it violates basically directly or indirectly, basically the ethical policy of any country. So here's some examples. Murder of life insurer with the beneficiaries of the murder. So you murdered your spouse, okay? So obviously you don't expect to get rewarded for murdering your spouse, but basically. Death is during the commission of a crime, such as being shot while robbing a bank. Now, again, you needed money, you went and you robbed the bank, and in the process of robbing that bank, you got shot. Obviously, again, that is an illicit act, and so the end result is no, you're not going to get any monies for that at all as well, okay? Or you got killed, basically in a DUI, okay? Basically, again, what we're saying here is that in all these cases here, you knew what you knew, okay? You deliberately put yourself in harm's way and everything else, or you put the life insured in harm's way, so you caused that person's death and everything. So therefore, because you committed that illicit act, obviously you can't be expected to, in fact, get rewarded for committing that illicit act, okay? In other words, insurance companies will only pay for illicit acts, but not illicit acts, okay? So that's an important thing to remember. So the purpose, basically, is there are a number of cases in which we might ask the question, should we reward someone for committing an illicit act? I mean, I think all of you would agree that no, we should not be rewarding anybody that will in the process of committing an illicit act, crime or murder or anything along that line would go against the public order, basically, okay? So we should never reward someone, essentially, for committing an illicit act. That's really what we're saying. So the company basically saying is, no, we're not going to pay simply because of the fact that what you did goes against public policy. So that's, again, something else that you need to make sure your client is fully aware of, okay? And so basically, to summarize this part two of this session, okay, is that the contestability period is the first 2 years. So as we've said, if that could be innocent misrepresentation for that first 2 years, if we catch that, then the contract is voided, and you just simply get your money back, and that's the end of that, okay? Fraud, of course, is deceitfulness, and so therefore that will go at any time. It could be 10, 20, 30 years down the line, okay? And then, of course, there are 4 other ways the insurance companies could terminate the contract or deny a claim. Material misrepresentation, which, of course, like I said, is the first 2 years. Fraud, of course, which goes on for forever and a day. Non-payment of your premiums, obviously. There's only that 30-day grace period with the exception of universal life, which has a 60-day grace period, okay? And, of course, payment against public policy. So I hope this was useful, and we will see you next time.